What's going on, everyone? Welcome back to the channel. If you're watching here from YouTube, thanks for coming on again. And if you're here on Facebook, all the people that are watching this video, my name is Blankenship with Keller Properties. And today I just kind of want to, bring some of my colleagues and friends up here and kind of talk about what's kind of happening in the Chicago suburbs real estate market, right? Everyone's social media feeds, the news is talking about the economy, inflation, housing prices going here, interest rates going there, but I thought it'd be a great time, especially in the midst of summer before everyone takes their kids out for vacation and start doing, family stuff or, taking some time off. I thought it'd be a good time to just kind of break down what the market is, kind of happening in all my colleagues' respective areas that, do a lot of business in their specific regions and everything like that. So I'm going to bring up to the stage Chris Cubed, Chris, and Chris. And if you guys want to give a quick intro going, whoever wants to take it away first, and we'll just keep going from there.
Yeah, I could jump in. Thanks everybody for jumping on. Chris Wallace with Keller Williams Inspire, based in downtown Geneva, primarily focused on the Tri-Cities, St. Charles, Geneva, Batavia, but venture up as far north as Hampshire, all the way down to Aurora and everywhere in between. So excited to be here.
Hey guys, I'm Chris Grano with Keller Williams Infinity in downtown Naperville. Serve primarily Naperville, Plainfield, Aurora, Romeoville, and kind of those, western, slightly southwestern suburbs. Excited to be here, Brandon. Thanks for having us, and looking forward to the chat.
Yep, thanks for having us, Brandon. I'm Chris Sifnotis with Keller Williams Inspire out of the Elgin office. I've been in the business for 8 years. I service northern Kane and McHenry counties primarily, and then back towards the O'Hare Airport area, Elk Grove, Schaumburg, and so forth.
Awesome, you guys. And then for all you guys that are watching, the 7 people that are live right now, and then Chris, and Chris, if you guys want to share it, I'll tell you guys when we're going into the conversations more. But if you guys drop your comments down below to all the 9 people that are watching right now that kind of just want to pick our minds. I mean, we all do a lot of business kind of around the area. We have a lot of buyers and sellers. So they'll all drop their contact information below if you're looking in their respective areas. But without further ado, the very first question, I mean, ultimately interest rates have jumped up significantly kind of where they've been at, and especially kind of from year to date, especially where they were at last year. But kind of since June, where have you guys seen the market, shifting towards, or what's kind of been happening in the market in your guys' areas? Because, there's a lot of stuff when it comes to real estate going on with inflation and the economy and all that good stuff. So, Chris Grano, you want to take it away on what you kind of been seeing with this kind of shift that we're, kind of going through?
For sure. So, I think the thing to remember is interest rates have an effect for sure on the market, no doubt. They primarily affect demand, right? They have no effect on supply whatsoever. So, however, both of those pieces of the equation matter when we're talking about what are prices doing, when we're talking about how many offers there are, how competitive it is. So we are seeing, I think, a slow in demand. I think we saw in the last couple of months, applications, mortgage applications go down, although I just saw a report that they were back up again. So you never know what's going on. Sometimes maybe that's acceptance of people realizing, okay, this is just reality. But I think in Plainfield, Naperville, that kind of area, I will say that areas like Plainfield, Romeoville, and Aurora, okay, which have prices slightly less than Naperville, and they're seeing still, if the property's priced right, many offers. I mean, I had a property in Romeoville closed about 2 weeks ago. 25 offers, went for, $50,000 over list price. I mean, so still huge activity in those markets. Naperville, still again, pretty hot. However, I would say that maybe I'm seeing a few less offers in that market, a few less showings, but still, while inventory is this low, I'm not seeing the interest rates have that really tangible effect just yet.
Yeah, I think it's totally agree. I think I work a lot of relocation kind of buyers, and I kind of have the conversation is that, typically if you're around a mile from the train station, inevitably if, people start working the city again, and ultimately people always want to be, close to the big city, train rides kind of pretty easy to get to. But also for me is like, my clients with the shift and everything happening is that, the interest rates, haven't really affected a lot of people if they were already cash heavy. So, it's been pretty interesting. But Chris Wallace, you want to chime in on what you guys are seeing out there in your area?
Yeah, thanks. I think for us, we're seeing a lot of highs year to date, specifically in Batavia and St. Charles. Batavia's highs for numbers sold, under contract, and for sale year to date. So inventory is starting to pick up in the right direction. The real outlier is Geneva. It's a desirable place for a lot of folks, and actually price per square foot on new listings is up, and actually month supply of inventory is actually down 58%. So a lot of homes have gone under contract in Geneva, and the new supply hasn't really backed that up a little bit. What I expected to be a much busier weekend for buyers and just new listings in Kane County this past weekend to try to beat the rush of 4th of July coming up actually wasn't the case. However, that does mean as a result, some of the properties that lingered into this past weekend, we were able to have success on and come in under list price on the buy side. For listings, it really is dependent on two things. Kind of to other Chris G's point, the best houses are still getting a ton of action. There was a listing not by my team, but one that I drove by the open house, and it was absolutely packed. Cars just pouring into the main street. They had multiple offers before that open house even started. And on the flip side, it's all about what you're offering as a seller, which I know we'll get into more, but if you're offering a great product and you market it well and the photos are good and they're bright, people are still out there, especially in that 350 to about 450 price point, where that captures the most affordability out of most buyers. I'm still seeing quite a few multiple offers, 10 now, maybe is 5, but people still willing to cover appraisal or come up well above list price. So it really just comes down to what the product is that you're offering. If the home needs some work, or it may not photo well, or you're not open to maybe staging or doing some decluttering, that can really heavily impact things, because it's got to be, for all the buyers that are sitting on the sidelines, or that's what they're telling us, it's really got to be the best home that gets them willing to get out and see it and take that risk again. So it's been really interesting, but how you present your home is an absolute key.
Totally, for real. Chris, notice how about you? What are you seeing up north up there, man?
It is certainly slowing down in terms of traffic. That demand, that interest rate has poured the bucket of water on demand, but we're throwing buckets of water at a bonfire. So the inventory is still not coming up. We're seeing 60% absorption in terms of, on a weekly basis in the 5 cities I track. Crystal Lake is actually really leading the pack in price changes and days on market in terms of taking us back to a more balanced, at least headed towards a balanced market. But yeah, I had 3 multiple offers first weekend 2 weeks ago, and the conversations are already starting to change and going, it might be multiple offers, but it might not happen in a weekend. And so that expectation out here is certainly starting to take effect.
No, for sure. And I think the conversation, with that being said, not getting multiple offers or any offers after the weekend, it's a very important conversation with our sellers right now. And that kind of brings me, into the next question, with the conversations we are having with sellers right now, right? I've listed a few properties, earlier in the beginning of the year, and they'd always go crazy, right? The whole weekend we get a bunch of showings, right? But I feel like in the past month, and you guys could chime in as well, but what I've noticed, and kind of my strategy for listing property right now, especially, just putting the most convenience for sellers, especially if they're still living in that property, is that typically we list on a Thursday, we start showings on Friday, and we show it through, and we're typically calling for a highest and best with a multiple offer situation on either Sunday evening or Monday morning. But something interesting, because I like tracking the amount of showings that my listings are getting, and usually when I'm playing that game right now, the past 2 listings I've thrown on the market in Westmont and Bolingbrook, is that we list on Thursday, we get an influx of showings on Friday. It's pretty mediocre on Saturday, but then it's weird because it's crickets on Sunday. And then I have a listing in Bolingbrook. It's only been a week. We have some offers on it right now that we're negotiating, but we've been on the market for 7 to 9 days right now, right? But it's funny to see buyers agents giving me the phone call and saying, "Hey, do you have multiple offers yet?" Well, why don't you all write, and then we'll get multiples, kind of thing, right? So whoever wants to start, what are the kind of the conversations you are having with sellers? Because I know the dialogues that I've been having with my people is that, hey, you might not be in that multiple offer situation, or hey, you need to price competitively and you need to do X, Y, and Z to really get, show ready. So whoever wants to take it away first and kind of bring up what kind of conversation you guys are having with your sellers, feel free.
Yeah, I think we cover, the four of us cover kind of a wide variety, and I know there's a little bit of overlap in there too. And of course, I'm sure some of us list properties outside of maybe an area that we're at all the time. But the point to that is every market is different, even within the suburbs, right? So number one, when I'm having conversations with sellers, you've really got to do the homework because, for instance, right now I've got listings in Berwyn and in Lisle and in Orland Hills coming and in Frankfurt coming and all over the place, Naperville coming. And so you've got to know that particular market, what the days on market are, what the average showings are, because if you want to give good expectations to your sellers, you have to let them know what the temperature is. Number two, the conversations that look more like preparing them for how things have been moving. I mean, the four of us know, like you said, Brandon, it used to be that you would list a property and we would be anticipating prices. So when we would run comparables, you'd look at what sold and then you look at what other things are doing. And you kind of account for that by giving it a little bit of a boost to look forward, right? Mm-hmm. Can't do that anymore. You've got to go back to those comps and really keep it in line. And I'm even seeing some pushback on appraisals too now. So I think you have to have those conversations. Sellers need to know too that, and I'll kind of shut up after this, but you've got to do things right. I mean, from day one, if you wanted to get the best results, you still had to do it right. You didn't have to do that to get it sold. Now, to get it sold, and get those kind of terms you want and the price you want, you have to do like Chris Wallace said, and I think, you've got to get the right pictures. You've got to get the video. You've got to get properly priced, properly presented. Because if you don't, it's going to sit, and then you're going to wind up accepting even less than you wanted.
Yeah. Expectations 100% is we sit in our CMAs and our conversation on pricing is about what has happened / here's what went under contract / here's our competition. And it's all a guess as to what's going to happen next. And I always want to minimize the hurt and frustration. And so do we come in, yes, our range is 420 to 440, but if we sit at 420, we're going to attract far more people and get the best option of terms for you, Mr. Seller, than if we go at 440 and, we end up getting a contract at 430 for both listing prices. Which one are you happier with my service on? You netted the same dollars, but we get more traffic, we get more options. That is, I feel that I certainly have moved towards being a whole lot more aggressive in pricing than I was this spring.
Yeah, and I think to chime in, both great points. The expectations is key with sellers right now because the days of and again, for the best houses that are getting buyers to be like, you know what, let's go look at that one. And I know we're going to talk buyers too, but you have to get them on flip 3 or 4 on their phone, looking at the photos and get them into the door. I mean, right now I'm getting ready to list a property later this week in one of the towns here in Kane County. And at that price window, give or take $50,000, there's only 5 homes on the market. One's calling for highest and best. 2 are completely outdated rehab jobs. And there's 2 others that are just okay or completely outdated, stuck from the early 90s. So, outdated kitchens, outdated bathrooms, the people that are coming out and still spending at the kind of high end, or even just as we flatline a little bit, they have high expectations. So even a price reduction won't do everything for you. But even letting a seller know, if we get to a point and 7 to 10 showings happen, and we're not getting an offer, that's the market telling us we're 3 to 5% overpriced. And I do think 7 to 10 showings, even as buyers have maybe backed up a little bit and put, just their hand and their guard up a little bit, may even be saying that you're closer to the 5% overpriced. But that's why the initial price and presentation is so key. And the other two, Chris have mentioned that, is because at the end of the day, you can knock $20,000 off your list price, but it doesn't change how, what kind of counters you have in your kitchen. And that's not to say I tell sellers, hey, let's go spend $7,000 on quartz and countertops, but we better be making up for it in other areas. And we sure better be really nailing price right out of the gates. To what Chris Sifnotis said, which is to get the best terms possible. And the days of as is and not having any requests come through after attorney review and just having super crisp, clean 5-day attorney review process, and we're on to getting the financing contingency buttoned up and clear to close. That's definitely shifted as well. There's going to be some longer attorney review periods, some back and forth, and just again setting that expectation that your home was built in 1994. There's probably going to be some asks here and there, and that's where the attorneys come in. But now I'm just running with this. But again, it's all about expectations and just making sure you're on the same page. You just don't want to, under promise and over deliver, because this is a big transaction for any seller at any price point. So,
and if I can piggyback on that, sorry, Brandon. I just wanted to say, you both other Chris has mentioned, getting the pricing right, and pricing is it's an art too. It's not just numbers. For example, we have to live with the reality of internet pricing brackets, right? So we may look at a home and say, and I've had this conversation with sellers a lot, we may look at a home and say, all right, it's probably worth 365, maybe 370, but we want to price it at 350, because if you don't, you're going to miss everybody looking between 300 and 350. And they might be willing to pay 365, 370 for it. But if they don't see it, they can't write an offer for it. So that's a conversation. And then I know we're going to talk about buyers in a second, but I think the other thing that is, it's hard conversations with sellers, and I feel for them. I bought and sold last year, so I get it, what's going on. And but what's hard to say is, for folks who are out there looking, maybe they're buying first. I've had a few of those, and they had to go put everything into that offer to win it. They had to waive this and that and as is and go, 10%, 15% over list price. And now they're listing, and it's a little bit different market. And I get it. It's hard to say, well, I had to do all that. Why won't my buyer do that? Well, because we only have one buyer, not 10. And it's, like you said, it's all about expectations.
Right. And to all what you guys just said, I think expectations is super important right now, especially when, trying to price a property, right? Typically, I'm trying to look at 3 months or sooner of what's closed around, my subject property, especially if I'm doing, certain areas here in Glen Ellen. If I'm doing South Glen Ellen, I can go by neighborhood and stuff like that more. But I'm pushing it out maybe 6 months, trying to get at least 3 solds. But how are you guys comping property right now? Because I'm still doing the 6 months, but I'm taking into account where the interest rates were and what kind of buyer pool there was. But I'm also looking and setting my expectations with my seller and saying, like, hey, I know if we listed this 3 months ago, we'd probably be here X, Y, and Z. But ultimately, you want to be at 450, and I think your house is worth 450, but the market might not be grasping that. So if we list here at 450, get one buyer, that's what we have. And there's a good chance that they know they're the only buyer, and they're going to, attorney review, like to what Chris Wallace said, is going to last longer, right? But if we were here at 425, 430 kind of thing, and, working a multiple offer situation, and if we end up at a 445, 450, but we have 3 or 4 offers right there, we have a better chance of having that, crisp, clean 5-day attorney review period where we keep the transaction going on. So I'm just, I know you guys list a good amount of property around your, the area and the Chicagoland area and stuff like that. But how are you guys pricing your homes right now, especially trying to stay ahead of that curve with the shift and stuff going on?
Yeah, it's definitely interesting. I think the pricing piece and looking at comps is definitely a key. And every town, every home is different. So you have to drill down, and we kind of play on those two lines for pricing. The gray area, which is the buyer and the emotions that come into walking in a home and seeing themselves there, pulling away the personal touches in the house and the decor, and getting more to a neutral house is key, whether that's paint, staging, and or all the above. And then obviously the black and white piece, which is the appraiser piece. And with less appraisal gaps coming in, and obviously less offers coming in well north of price, that's really making that conversation that much more important, because the appraiser view is something that Chris G mentioned. We're starting to get appraisals are coming in. We've been obviously, our eyes have all been widened at times when something appraises on the buy or sale side. It really matters to everyone, as high as some of them have come back, shockingly high in some cases. But I think that's going to slowly shift here. I'm actually working on comps for a listing coming up, and there's a lot on the line for this house. We're actually under contract on the buy with a home sale contingency, and we need to be on market by Friday. So now the pricing is that much more important, where we can't really reach for the moon. We have to price it competitively to make sure we're under contract to deliver on the purchase. So, there's a lot of additional factors at play here, but it really is, making sure you not only look at what square footage is, beds, bathrooms, etc., but also looking at, just age of home updates. I mean, you really have to take more of an appraiser's viewpoint and get photos in front of the seller to say, look, Mr. or Mrs. Seller, this property sold in 6 days, yes, but it had a completely updated kitchen and yours is not, or vice versa. So I think you have to really drill down into the details, and also make sure they just understand and can trust your opinion when it's all said and done, and you shoot a number in front of them. So.
Yeah, I think you had a great point, about what the situation is. It's all situational. I mean, if number one, it's what are the seller's goals? That's a different conversation. I mean, if we're trying to absolutely maximize dollars, that could be one thing. If we have to get it sold in a certain amount of time, that's another conversation, right? So, or sometimes it's just ease, right? I mean, so I don't want a bunch of people in my house or whatever. There's lots of conversations that shape price, but then you're totally right. We have to look at it from an appraiser's standpoint. I often talk when we talk to sellers and say, well, I've got to defend the price of your home against three people: the buyer, the buyer's agent, and the appraiser. And it's three different looks. Chris Wallace, you just said the buyer is going to look at it a little bit more emotionally. They're going to think about all the things they have to do. They're going to overestimate how much all that costs, because people these days, including me, don't know how to fix anything, right? So if you're going to do a half bath, if you did it yourself to update it, maybe it really only costs you $2,000-$3,000, but they're going to go hire somebody and it's going to cost them 10. And so they're going to calculate that in their head, and then the buyer's agent's going to do what we do, right? They're going to pull comps and they're going to go, I don't know if I agree with you there, and they'll tell their buyers. And at the end of the day, the most important person these days, as you said, because appraisal gap waivers are less and less common, is ultimately that appraiser. So, I think you've just got to really, you've got to look at it from every angle, and you've got to explain, to your seller and just help them feel empowered by information. At the end of the day, it's their call, but we have to give them the best information possible.
And that's it, is information. The data that we have in terms of being able to look at a neighborhood instead of an entire town. Arlington Heights is a nice, tall, huge town, and the stuff that's right on the train tracks in downtown is very different than the stuff that's nearly Buffalo Grove. And here in Algonquin, we've got the east side and the west side of the river, and so being able to really zone in on what's happening in your neighborhood is number one. I don't do anything less than 90 days, or anything over 90 days, because it's so different. And then really going, what is your motivation? And I would rather have options for you than to, it doesn't mean we're not going to get the best dollar, but is that what is the best way to serve them?
Yeah, and you mentioned, Brandon, the 6 month is where you're going back, and we do anywhere from 4 to 6. And I think, Chris, your point on even 90 days, I think, is super interesting. This this comp report I'm working on right now, to put it in full perspective of how the market is shifting. I have 4 properties that are closed on this comparable market analysis. Average market time 5 days. The 2 that are active, average market time at 12, and the 3 that are under contract, average market time of 38 days. And that's all in the same town within a mile and a half of the subject property. So if that doesn't tell the story as to where we were within the last 2 to 6 months compared to we were in the last 30, maybe 45 days, that puts it into full perspective. So especially in a situation where you got to maybe sell quickly and you're also trying to get top dollar. So this is possibly more so than ever a multiple, maybe 2 or 3 conversation before you put a list price on that listing contract, and then obviously put it out there in the MLS and all the other mediums, because it's got to be right. And you just have to have a pulse with your peers in the industry and what might be coming in that same town. So if you're constantly working with other realtors, that's big as well, is to know if you're about to list something above or below a house that, maybe actually getting a report pulled for it right now as well, that's going to hit market later this week. So that can be key.
Yeah, I think, for me too, is when I have those conversations with pricing, is I typically never give us like a ballpark number on like where it's going to end up. I'm typically given a range. And for the most part, even I can look on the MLS if they bought like 3 or 4 years ago. But I usually just go with the 2-step approach. And, I come in, do the listing appointment, and I come back again with a phone call and just say like, hey, this is kind of where I think you're at. But enough with sellers. Let's go right into the buyers. So how are your buyers kind of reacting to this market right now? Because I know, when the interest rates spiked up 3/4 of an interest rate, I had, people thinking the sky's falling and people freaking out. And, ultimately, I figure you guys are all the same. You guys can, attest to it as well. But I'm not really salesy when it comes to my clients. Ultimately, I just tell them like, hey, at the end of the day, people buy or sell because of life changes, right? You have 3 kids, you live in an apartment, a 3-bed, 2-bath apartment. You probably need a house right now, right? So ultimately, it's all up to them. I think, I work with a lot of first-time home buyers, especially with, people from college and stuff like that. And ultimately, I just tell them, hey, let's work backwards. Where do you want to be monthly mortgage-wise, right? Because there's a lot more than just principal and interest that just goes into your mortgage, depending on what town you're looking at with property taxes and stuff like that. But personally, for me, I've had, a lot of buyers kind of take a step back, kind of want to see what is going to happen in the market this summer. They want to kind of enjoy themselves. And a lot of them, too, just want to kind of save money for the unforeseeable future and what's going to happen with, inflation and all that stuff right now. But I'm curious to see where your guys' take and, with your buyer clients and, what are they kind of want to do? I know I see a lot of agents saying like, oh, buyers are, offering so much below list price. People are wondering if the market's just shifted like that overnight. But how are your buyers reacting to this market?
I think everybody felt the kick in the knee when interest rates in the last 6 months doubled. Nobody likes that, but it got the people that didn't have to move out of the game. Okay, well, we'll just wait, or we've now been priced out of what we're looking at. And so that we return to expectations has dumped a bucket on people of going, oh, as a first-time buyer, I could get into a townhouse, and now at $375, I can't get into a townhouse in Geneva. I either have to change my location or my expectations. And now they're finding ranches that are haven't been updated since 1985. And so that mindset has already started to take place in terms of, I can move in here, a couple of splashes of paint, and I can totally see this, even though it doesn't have the granite and so forth, versus this doesn't have everything perfect. And so next.
Yeah, Chris, go ahead.
I'm getting a lot of questions, I think, is what's happening. Is that people want to know. I think there's a lot of misinformation. That's like popular term these days, but I think there's a lot of, people don't know why it's happening. So you have to kind of explain what's going on. You have to sympathize. I mean, I get it. When you could, 6 months ago, you could afford a home at $500,000. Maybe now you can only afford a home at $400,000. That's frustrating. I get that. And I think we need to educate is what I'm trying to do and put things in perspective. It doesn't feel great to say rates were at 3 and now they're at, 5.5, 6. But if you can say, okay, listen, the sky isn't falling historically. I know it doesn't feel good compared to 6 months ago, but historically this is about where rates are. And I mean, I tell them, hey, I'm not an old man. I bought my first house in 08 and our rate was 6.25, and we didn't blink an eye. We didn't say, oh, I wish it was 3. It just was what it was. Cause several people who mentioned it, I needed to buy a house. And I think you have to kind of help them get the emotion out of it, let them vent, because it's emotions involved in buying a house. But then we have to kind of come back to why do you want to buy? And if it is a life change, if it is moving for a job, having a new baby or getting divorced or whatever it may be, you've got to do that. Now, how can we help you achieve that goal in the best way possible? The one question I get all the time now, is number one, is the market going to crash? I'll go out on a limb. I've said it many times. No, it's not. The crash in 08 was historic. It was for different reasons. The market looks nothing like it did then now. So
it may feel that way, but it does. The underlying is
no. And then along with that, well, should I wait? I get that question all the time. Should I wait? Nope. No, you shouldn't wait. Number one, if you need to do for life purposes, don't put your life on hold because of the interest rate. But number two, no, the interest rate, the Fed's already told us they're going to continue to raise the base interest rate, which may not have a direct impact on mortgage rates, but it's certainly not going to send them down over the next 6 to 12 months. And prices, despite what some people will tell you, if you look at what Fannie Mae is predicting, what Zillow's economists are predicting, what our economists at Keller Williams are predicting, prices are not going to continue to go up at 20%, but they probably will at 5%. So, I think it's still the time. If it's right for your family, I think it's still the time to buy.
Yeah, and kind of piggybacking off what you said, Brandon, when you asked us this question is, I think the best realtors are the ones that put the human element into it, but don't let that get in the way of the buyer making a decision. And when they ask, I find that clients I've taken out 1 or 2 times that I met in an open house, we get to know each other really well, pretty quickly. But I also try not to get in their way. And I think there's that moment where, I think we all have that human element where we sit at a closing table with buyers that bought a month or 2 ago, and we're kind of sitting back saying, whew, that's a lot of money for that house. Like, we're sitting there and we know what they paid, but then you hear the attorney say, so you guys are locked in at interest rate at 5.0%. And then I also do that flip side. I'm like, whoo, you guys got lucky, so it really is, to a certain extent, kind of relative, right? So someone that paid north of 6 for a house that they could get for 5.90 now, but are at a 1.5 better than someone that's paying 5.90 now. It really is all relative. And so I think for the casual buyer, they've left. They're like, you know what, we'll just sit back, let the market crash, as usually the casual buyer is the one that's saying it's going to crash. And then the people that need to move, they're tight, they have a newborn, they're in a two-bed rental, whatever the case may be. That's where we come in and help understand what the interest rate changes have done to the pricing of homes or the ability to get a home under list price. If a house is listed for 550 today, would have went for 590 2 months ago, but is now going to go for 530 because of what's going on in the market. Working with a buyer's agent, no matter who it is, that understands that, is going to keep some money in your pocket to fix that half bath or to do different things or to just live your life and go on vacation. Because it comes back to that. What do you want to spend on a monthly basis that makes you comfortable, that you can still live the life that you want to live? There's a lot more than just where you live. You have to be able to live your life as well. So those bigger conversations, I think, almost got lost in a way as prices got so crazy, because you focus so much on the competition that now it's causing people to turn around and look in the mirror again and say, why are we doing this? Not how do we beat everybody else? And I think that's as much of a shift as the rates and how the prices have been affected as well. So.
Right. So we got a question right here from Facebook from Mikey. What are you doing with your buyers when they say they want to wait it out? And I think we all kind of touched on it, pretty well. I mean, ultimately, when it goes back to like, what's your honest motivation, right? Do you have a newborn coming on? You're in that 2-bed rental. I mean, there's a lot of things that go on to it. I mean, like I said, I work a lot of relocation. Ultimately, the people that I service that are relocating here, are veteran professionals in their industries, and they make good incomes, and they just understand that, hey, we're going to be here for a significant amount of time. It just makes so much more sense for us to purchase and kind of just hold on, because they understand that their mortgage is going to be fixed. Obviously it'll go up a little bit with property taxes going up year over year, but I mean, like I said, for my people, the monthly has to make sense. You need to figure out why you're moving and kind of how long you're staying. And then if all those three of those factors align, like, hey, I'll bet on myself every single day to kind of help you get the job done. So what are you guys kind of saying to your buyers? We'll touch this on real quick, because I got another question from YouTube, and then we'll keep it moving.
I think the question to ask the buyer is why? What are you hoping to get? And how long are you willing to wait for that? Because if it's 3% interest rate, if the feds don't subsidize loans by purchasing mortgage bonds left, right, and center, we may never see 3% ever again. So if you're waiting for that 3%, you could be renting an awful long time, and now you've just bought somebody else's house for them instead of yourself. I think really the question on that is why, and what are you hoping to achieve, and see and find the answers to them on why now still meets those needs.
Yeah, and I think the why is huge. And I do love, the reason I love working with buyers is some of the tactics and strategy that goes with that. And so I just try to encourage buyers, be like, look, I love seeing houses. I swear the amount of clients that have said, we don't want to waste your time. Look, the more houses I see, because buyers—
That's the golden question.
Right?
Always, I feel bad. Sorry, it's taking over your time. This is my job.
This is my job. And the more houses I can get into and touch and feel and see as to why they're priced where they're at, it's going to help me on the next listing, right? It's going to help me with the next buyer. It really is. I think buyers and clients and people that are even kind of 1 foot in, 1 foot out on buying, or maybe haven't even reached out to a realtor, should really just consider taking our time, use our time. Let us go take you to houses. And again, the good realtors, like the four of us, aren't going to be the ones saying, all right, what are we doing? How are we going to write? Like, what are we waiting for? And kind of nudging them in. It's like, what do you guys think? And we just have to be patient. But at the end of the day, as all the buyers are exiting, I'm like, just stay here. Don't leave the party yet, right? There's still, the DJ's still going. Stay at the party a little bit longer. You never know. Kanye may come out later. You just never know, right? Like, why leave a party that ends at midnight at 11 if you're not tired and having a good time? So the buyers that aren't tired, stay a little longer. And if the right home pops up, awesome. You're going to be one step ahead of all the people that have already left and maybe haven't talked to their agent in a couple of weeks while we're going and seeing the house, because we're talking on a weekly basis. So I have buyers that cool off for a couple of weeks, or it's like, hey, don't worry about it. Go on the vacation, take the family. The houses will still be here when you get back. So yeah, they can wait. Home prices are going to continue to shift, but I get why there's been a little bit of just like a whoa, but I think it's just stay with it. Post 4th of July inventory, it's going to be interesting to see, and the numbers have started to tell us that there's no reason to completely step out entirely, unless this is just kind of like a fun exercise. In which case, if you don't have to buy, you don't have to see houses either. So.
Chris Grano, you want to chime in?
It's all been said. I agree with everything that's just been said. I mean, at the end of the day, what Chris S said is you're paying somebody's mortgage. I mean, if you're renting, right? If you're staying with family, okay, I guess that's fine. However longer you can take that. But if you're renting, rent prices are high, and you're paying somebody's mortgage. So get in the game, get some equity under your belt.
Right. And then the last question, Michael from YouTube. Shout out to you, Michael. I think you've emailed me before, so that's pretty great. When do you guys think the higher interest rates will begin to really impact listing prices? I know this price cuts vary in frequency across the country, but not really in Chicagoland. So I'll jump in first. I mean, I've noticed price cuts here as well. And I think we were talking about, all four of us were talking about off screen, but I mean, people are just kind of price reducing because, they were probably taking a stretch. It wasn't really just because the market's crashing. It was ultimately, they were just overpriced and they shot way too high. When do I think higher interest rates will begin to really impact listing prices? I think it's kind of happening now. It's not going to be like crazy, but if we hit the sevens and stuff like that, or even eights, it could cool people down for sure. But what are your guys' thoughts on that?
See, I think we're going to get a lower appreciation rate versus a decline in prices. Even at 8%, then we're going to see a 1 or 2% increase in value over the course of 12 months versus the 20 that we did in the last 2 years that isn't sustainable, as we're seeing. But I don't see it affecting prices negatively, especially until we move to the continuum. Being in an extreme seller's market, we got to get to a seller's market and to a balanced market before we can touch a buyer's market. And that doesn't even guarantee that we're going to see prices flat market.
I think you were kind of stacky there, Chris asked, but we heard the gist of it. But Wallace, Grano, you want to chime in on that?
Yeah, I think the short of it is I agree with you, Brandon. I think it has, and I'm seeing prices at the 800 plus price point reducing like by 10 grand, and then I see a house for 350 reducing by 10 grand. So I think sellers who spent the last 60 days prepping their home to sell, when they started prepping the home till now, still hasn't quite hit them, and probably the listing agent to a certain extent as well, like what the actual effect has been. And so the idea of reducing the price on a house is still very foreign to people over the last better part of 2 years. And so now people are doing it, but they're like, well, we don't want to give the house away, so let's just reduce by 10, and the house is listed for 650. So I think on the buy side, it's important to know that if you see someone do a slight reduction, they're seeing the market's told them something. And if you're in that market, that doesn't mean that the house is right for the taking and you can come in 50 grand below list, but it means there's some negotiations that just happened without you maybe even seeing the house yet. So again, that's where it goes back to our last question. Like, buyers come in, you see a house you like, it just reduced 10 grand. Like, let's go check it out. You probably would have just assumed 2 months ago that house would go for 40 over. So I think it's happening. I do think the Midwest is still on the affordability scale across the country on the better side, believe it or not, Michael. So I think it's just interesting, and will continue to happen over the next few months. So.
Yeah, I think it's important. Like, if I'm reading Michael's question correctly, will it begin to impact listing prices? I do think it will eventually, and it may be now. It is for me. I think probably for the four of us here, it is impacting listing prices, meaning, right? But that doesn't mean it's impacting home values. This just means that, like you said, maybe where before we could be a little fast and loose, with the list price and say, okay, I'll throw another 15 or 20 on there. Sure, why not? It'll be fine. We can't really do that anymore. Now you've got to tighten it up and really do what we talked about. Will it impact home values? I think what has been said, yes, it will taper off the increase, but it's not going to make it go down, at least not anytime soon. Not until, I don't know if we've mentioned it, there's a 5 to 6 million home shortage in America right now. So until that gap gets brought together, values aren't going to go down. So I think, we've just got to stay vigilant, and stay sharp. And if you're buying, just, work with an agent who's going to give you the information and help you make the right decision.
Right. Yeah. And at the end of the day, that's all we can really do for our clients is just act as a fiduciary and just kind of give them everything they need to know to kind of make the best decisions for not just themselves, but also for their loved ones. But Chris Cube, I appreciate you guys jumping on the live stream, chopping it up. Thank you for everyone on Facebook, YouTube that are going to watch this and watch the replay. But let us know where the people can find you, especially from YouTube. If they don't want to reach out to me, they can reach out to one of you guys, which would be awesome too.
Yeah, if you're looking to head west to the beautiful Tri-Cities or greater area, feel free to call me 630-423-5344. My email is christopherwallace@kw.com.
And for your north and northwest suburbs, 847-254-7592 and c.sifnotis, Sifnotis @kw.com.
If you're looking at Naperville, Plainfield area, I'd love to help you. I'm at 708-404-0698, or you can get me at chris@chrisgrano.com.
Awesome, you guys. Thanks for watching, everyone, and I will see you guys on my next video.